Life Management Science Labs would like to acknowledge that we live and produce this podcast on the traditional lands of the Wurundjeri people. We'd also like to acknowledge the traditional owners of the lands of our listeners and our international colleagues. We'd like to pay our respects to their elders past, present, and emerging. Hello everyone, and welcome to Wealth Pathways, the Affluence Science Insights podcast produced by LMSL, the Life Management Science Labs. We are champions of life management science, providing structured insights informed by science and inspired by practice on key aspects of conscious living. Each week, we bring you scientific and practical insights on each element with the expert knowledge of professionals in the field. I'm your host, Marie Stella, coming to your ears from Nam, Melbourne, Australia. Let's learn together.
Hello everyone, and welcome back to the show. Today we're diving into the fascinating world of real estate investing through the lens of behavioural science, economics, and emerging technologies. Gone are the days of location alone being the golden rule of property investment. Today's savvy investors are employing a range of insights and tools to stay ahead of the game, and we're here to learn more. So guiding us through this is property and real estate lecturer Yang Shi, who sits on the faculty of Deakin University's Department of Finance. She's recently received her PhD degree in finance from the University of Melbourne, and her primary research interests lie in real estate finance and behavioural economics in housing markets. So welcome to the show, Yang Shi. It's great to have you here today. Before we jump right in, could you tell me a bit about what compelled you to pursue real estate and property finance?
Actually, my educational background is a little bit messy. So my undergraduate studies was in the mathematics and applied mathematics, although my major's in the math, my minor studies in the finance. The reason why I pursued this as the undergraduate studies is because during the high school period, I understand that what I want to do in the future is a faculty in the universities. So not only I want to learn something about the concepts on the finance, I still want to increase my quantitative analysis ability. So I pursue both. After that, I went to the UK to pursue my master's degree, and it's about applied economics, but the focus is the financial markets and banking. The reason why I do not directly pick the real estate ones is because actually my previous thought is on all of the investment tools in the market to analyze different investment tools and what should I make decisions when I have the money, when I want to increase my wealth during the investing period. And after that, so in my PhD, so finance, definitely, because this is the major field. But my focus locates in the behavior economics in the property market, the real estate finance, and some things linked to the high technology with the traditional investment tools. This is because comparing to the traditional investment methods, the reason why I focus on the behavior is because I am the human beings. I know that I'm going to make a lot of the mistakes that is different from the models showing me. So I'm kind of interested in this to explore how people make decisions in the real life when they have the opportunities. So that's basically my educational background and why I want to learn the behavior economics in the property market.
I love that. That's so interesting that you want to learn about real people because you're human and you make mistakes. So behavioral science, behavioral economics is really interesting to you?
Yes, exactly. Because I can explore how people think. And when I was the human beings to do the decision making in real life, I can get rid of a lot of the mistakes that is easily to be done for the normal people without a stronger background on that field.
Yeah, that makes sense. And what is a common misconception about investing in real estate?
I think maybe this is a big question. Investing in the houses is always better than investing in the apartment in the Australian market. So
really,
people usually discuss on this topic, right? But I think this is the misunderstanding. It's because it depends. It depends on how much we have. So our budget. It depends on the location, because location is one of the most important factors when we make decisions in the property market. And it also depends on our investment target. whether we want to have a higher capital growth for the property appreciation and land appreciation relevant to it, whether we want the stable income during the holding period for this property investment. So all of these things do matter on our investment decisions in the property. So the question is not the simple one, which is houses versus apartment, but a more complicated one, which is within our budget, depends on our investment targets. Is the houses better or the apartment better? For example, if I, as the younger generations, I don't have the kid, I just live with my partners, then then maybe I just want to live in the CBD areas with a lot of the restaurants, with a lot of the public transportations, and I can easily find every recreations places that I want to do during the weekend after the working period. So maybe living an apartment or investing in an apartment near the CBD area is better than a house, because basically the house located in the CBD area is kind of old comparing with the other areas. But if I do want to invest in the house, then I may need to find another location, maybe 30 kilometers away from the CBD area or far away from my working place. Then it takes a longer commute time every day, so it will make my life be more difficult. So under these situations, apartment may be better than the house. Another example is if I only have like a 100K Australian dollars here, then it's so difficult for us to pay for a house. Even it's a old house living rural areas is still expensive, more than the 100K. On that situation, I only have two options. The first one is I need help from my families or my partner's families, then maybe 6 pockets to help me to buy a house, but still needs to have a mortgage. So my life will have more burdens on the mortgages, on the debt services, and I will not enjoy my daily lives a lot comparing to the situations I do not have such amount of the mortgage. So under these situations, then apartment may be better to release our lifestyle. The second scenario is, okay, I only use my 100K to buy the house, but maybe the house is not at the locations I prefer. The house doesn't provide me the amenities or the facilities I prefer to have. Then it's go far away from our initial budget, initial expectations on the properties. Then maybe house is not a good thing under that situations. So my key point is, it's not always the case for a house to be better than the apartments when we live or when we invest in the property market. It depends on our budget, our preferences, the locations, and the many other factors. So it's like a combination of all of the factors.
Yeah. That's a really great introduction to our topic today, and it's very intriguing that it really depends on so many factors. Before I get more into the deeper questions of our topic, we'd love to get to know you a little bit better first. So this is our segment, Have You Met Yang Shi? First of all, do you have a favorite book that you could share with us?
To be honest, so when I start to pursue the PhDs, I barely read the books. Instead, I only read the research papers or the textbooks, handbooks related to my research field. But for this question, maybe I can introduce you a book I read during the pandemic period, because kind of time is frozen under that period, and I read some books to spend my spare time.
Yeah.
The book is in Chinese, named The Skin. It's a kind of book like the Educated in the English version, or the Tuesdays of the Morleys, I think. So it's a lot of the stories for the single person or the families living in different areas in China. And the small daily life stories, they're going to tell us a lot of the emotions or a lot of the identity or the family issues or the social issues in the mainland China. So from each single small stories, I can find some common points, similar or the same as my own life. So that touched me a lot. And if I want to use the book to be it connected to our topic today, then when we invest in the market, no matter this is the property or the financial markets or other investment tools, then we need to have a very good identity, and we need to understand the neighborhoods, the social environment, or the peoples near me, because all of these characteristics going to impact my investment decisions. So yeah, I think this book not only affect my thought, my self-reflection on my daily life, but also gave me some ideas or thought on my research on the behaviors of a single person.
Oh, that makes sense. I love a book that's relatable and you can kind of find a piece of yourself in it. That's really interesting. Do you also have a movie that you've enjoyed recently, or a TV show maybe?
Oh yeah, recently the movie is very famous. I'm not sure whether you watch it or not. So it's called the Naja. So this is the Chinese an animated film. It's talk about a boy who was born by a bad destiny, and the people so living near him just think, oh, the boy is bad, and they do not want to play with him. And for the adults, they just tell the children to not play with Naja. But Naja doesn't want to believe this is his true life. This is true. This is true life. So he wants to change the life by himself, doing everything he can. And at the end, so he fight with the real bad peoples and save the lives for the people living in the same town with him. And the people change their thought or opinions on the boy was born on a bad destiny. So the movie is animation and the technology is so amazing there, but the story is so touched. So I'm moved a lot just to do yourself, try your best to do the correct things that you think, you believe, and the people going to change their prior expectations or their biases on you at the end of the day. So just to keep your initial target in the real life.
Yeah. That sounds really interesting. I'm interested to see that movie, actually. It sounds very beautiful, and I'm sure the animation made it look really beautiful as well. Are you listening to any podcasts at the moment?
Oh, seldom, but I tried one. The one was posted by a group of the financial academians. So they just every week they just invite a guest faculty, and he or she will introduce his or her current researches, and basically it's a kind of the seminar or the workshop or the conference. But the different thing why I want to listen to this podcast is they will share the whole process, how they initiate this idea, how they work on this, how they think about the empirical settings or any other details in the paper. And even when some attempts are failed, they're going to introduce you and just make you to get rid of the same mistakes in your own research. So I learned a lot. So during my students period, I listen to this during the night time when I go to the sleep. I just open it to make me sleep better, kind of, but I learn a lot.
I do that too, but not with educational podcasts. I listen to a comedic podcast when I go to sleep. Yeah. My next question for you is, do you have a role model either in your personal life or professionally?
I do not only have one, but a lot. So the most recent one, I treat him as my model, is my principal supervisor at the University of Melbourne. So his name is Gary Tide. So actually he's at his 70s. So it's after the retirement age in Australia, but he keeps working. The way he works is not only at the administrative things or the supervisory things. He does the researches, his own researches after 70. So I was so shocked by this because based on my know, most of the faculties after they got tenured, like around 40 years old, they start to think the ideas, but ask his students to do the real things in the life, right?
Yeah.
So, but Gary works on his own projects by himself, even the coding things and the writing things. So I was so shocked. I want to learn from him about this to try to keep the enthusiastic in the research and do what I really like, even when I got retired.
Yeah. So that's so inspirational to see somebody like still so motivated at an
Yes.
older age.
He works on the research like 50 years.
Yeah.
And he keeps doing on that.
He must be so determined or something and so motivated.
Yeah.
And finally, my last question to get to know you is there a course or a class that you've taken that has inspired you, or maybe one that you've taught?
Oh, it triggers some painful but meaningful memory. So during the undergraduate period, so my major is math, right? So most of the mathematical courses are very tortured and they are extremely abstract or difficult. Yeah, that's true.
Yeah.
And so the reason why I picked this course, so there is a Chinese rumor saying that if you are majoring in the math, you need to learn the real analysis and the functional analysis. And if you do this for the real analysis, you need to take at least 10 attempts to pass. If you are taking the functional analysis, then your heart gonna go cold eventually. So it's kind of the pain in the Chinese, but I just translate to English.
Yeah.
But the reason why I picked this here is because I think most of the course I take in the math subjects do train me to think as a rational person, and they increase my logical thinking ability or the critical thinking ability. And the courses make my hands dirty on the coding or the algorithm or the math derivation things. And all of this kind of bridge a very solid foundation for my research. Although my research interest is in the business or the math or the finance or the economic theory essay, but I still need to do some quantitative analysis. And comparing to my peers working in some like economics majors in the undergraduate students, I think I have the advantages to do this part better. So I think such type of the course, although they make me painful, if you ask me again whether you want to pursue the math again, my answer is probably no. But after I survived, I may say, okay, I love that because it's training to make me more hardcore.
Yeah, sure. So it's helpful, but it was difficult at the time
really
to do.
difficult.
Yeah, of course. Well, that's a great introduction to get to know you a bit better and where you come from. So we're going to dive now into our topic for today. And first of all, we're just going to define a few terms that might come up throughout our podcast. So for starters, how would you define affluence?
Oh, I think affluence, it's about to have the money more than enough. So the total amount of money is not only to cover the basics, but to cover all of the things you want to have, you want to enjoy in your daily life. So during your life, you don't need to worry about the money at all. That's about the affluence. So another word related to the affluence maybe is the economic freedom. So if a person or a household is fluent in the market, then they can do basically everything they want to do because they do not have the financial stress.
Yeah, that makes sense. And secondly, what is behavioural economics?
Behavioral economics, it's an opposite sign of the traditional finance or the economics conditions. So through the traditional financial economic concepts, they think people are fully rational. Fully rational means when people make decisions, they're gonna maximize their utilities based on all of the resources they have. But on the other side, so behavioral economics, people are gonna be affected by so many other things, no matter this is your emotion, no matter this is your environment or atmosphere, but people will make decisions different from what they are taught. in the class or what they are learned in the models. They're going to have a different behaviors when they actually invest in the market. So this is about the behavior, indicating that people are not fully rational. To some extent, they are irrational and they will make some behaviors that is not to maximize their utilities based on the sources they have.
To kind of give like a bit of a metaphor to maybe explain it in like a simple way. So me, for example, if I was to go and get like a really high paying job, that would be like the most utility, like the best thing I could do for myself from a finance perspective. But behaviorally, I might hate the job. So I get a different job that doesn't pay as much to have a good time in it and, be less burnt out or, just I prefer it better. Is that kind of like what you're saying?
Yeah, exactly. That's a very good example because you are distinguish your finance condition and your enjoyment.
Like emotional condition.
Yes.
Yeah.
So when we talk about the traditional, the maximizing utilities way, we are talking about your wealth or your money. So this is about your profit, your benefit. However, when we add more considerations in the utility function, like my enjoyment or some other things that is difficult to measure, then things will be different.
Yeah.
Because the models, they're just the simplest version of the actual life, because life is so complicated. So yes, you're right. If you choose the lower salaries but you enjoy it, the work, then it's a kind of the behavior in the economics. But if you pick the higher salaries, then it's the traditional ones without the behavioral bias, but it's destroyed your enjoyness.
Yeah, that makes sense. And so in what ways does an understanding of behavioral economics influence one's real estate investments?
I think in the real estate investments, so affluence is important because we can understand most people, we are not affluenced. We have the financial stress, we have the budget constraints. So when we invest in the property market, when we make decisions, this is our concern we need to think about. Behavioral economics is even more important. For example, one of my recent research is on the extrapolative beliefs in the real estate investment. Extrapolative beliefs is about when past returns in the housing market is higher, then I will have a higher beliefs on the future market returns, indicating that past returns is higher than future returns is higher. Under these beliefs, I will invest in the property market. I'm gonna receive a higher price, even it's much higher than the fair price of this property, because I hold a stronger belief I'm gonna earn a price growth in the near future because of the return extrapolation. However, in the real world, we find, those people who hold a stronger extrapolative belief, they're going to lose money. It's because the price will not increase that much, the same as their expectations. So they pay higher, but the final price will not be that higher. Their capital gains will be lower. And even worse, we find most of the people who want to invest in the property market, when they hold the stronger extrapolative belief, they will lose money eventually. So that's a really bad thing for the household. It's because the property is one of the largest single assets for a single person or the household to invest. So the loss is very huge comparing to the stock market or some other markets. We can only invest in like $100 or $1,000, but in the property market, then it's $1 million. So this is one example why we need to learn the behavior economics, why we need to understand which type of the behavior bias we're gonna make during the decision-making process. The other example could be the numerical heuristics we talk about. So I have a previous publication focusing on the online peer-to-peer lending platform. So here, the single person, I can borrow some monies from other retail investors, and as the retail investors, the lenders, I can bid for the loans I want to do. I think, I can get higher returns. I can get very good returns in a short period. I find that for those loans with the lucky numbers with 8 or 6, they're going to attract more retail investors to bid. They are highly likely to be fully funded, and they will provide the better returns for the lenders for sure. However, the second type of the numerical heuristics about the round numbers, so 100, 1,000 or so. And for those loan amounts with the round numbers, actually they are less likely to be fully funded. But when they get fully funded, they have the higher chance to default. Default means those retail lenders or bidders, they will not receive their principals or the interests promised by the borrowers initially. So that's a bad thing. So two different numerical heuristics will have two different investment outcomes in the market. We try to distinguish the reason on that. So we find, okay, for the simple person without a lot of the financial background, they prefer the round number because it's simple. But for those complicated and well-trained, well-educated investors, they want to do something to cater the preference of those lenders or bidders. So they pick a different number with the lucky numbers to attract more. However, because they are the well-educated ones, maybe their qualities is by nature higher, so they're gonna repay the interest on time. So that's the difference. But that's another example to show how the behavior economics, how the humans' heuristics affect the investment decision makings and the final performance.
Yeah, that is really interesting about that behavior there of what people gravitate to, I suppose. What are some of the common behavioral biases that shape the decisions of real estate investors?
Oh, there are a lot. So in 2023 around, there is a literature paper talking about different types of the behavior bias in the real estate investment. And there are more 10 types of the behaviors, but the most important and the commonly used ones in my mind, the first is the return extrapolation, like I mentioned. When I say past returns are higher, I believe future returns going to be higher. This is the first type. The second type maybe is the loss aversion. So people pay more attention to their loss rather than their gains. So they will hold the properties they lose money for, but they will sell the properties earlier if they earn some capital gains. So
yes.
This asymmetric pattern makes them have a higher chance to lose money, but a lower chance to earn a higher capital gain. So at the end of the day, in the equilibrium situation, so the average payoff may be 0 or even lower than 0 for those retail investors. We still find the loss aversion on the research. We focus on the extrapolative belief. So for those people, pay a higher price in the property market when they hold the stronger extrapolative beliefs, they're gonna lose money, right? Because they pay higher. However, when they lose more money, the optimal way for them is to default. They do not pay the remaining mortgages or the remaining money. They just get off the market. However, most of the people, they still hold the belief, okay, my properties the price will go up in the near future. So I hold it, although I suffer from some loss. But we find that those kind of the people going to hold the property for a very long period unless they earn some profit eventually. That's not a good examples. And the other thing is the overconfident. So people is easily to be overconfident when they invest in the market, especially for those people who learn something about the finance or economics. They basically think, okay, I learned this. I am the masters on this field. I can beat the remaining people without any background of this finance or the economic knowledges. However, when we do the surveys for the people, over 50% of the people, they hold the same belief. So I'm better than my peers. So
That's funny.
Yeah,
Yeah.
that's the kind of the
I get
bias.
it.
Yeah, called the overconfidence. So the lesson is we should collect as much information as we can. We cannot directly believe our intuitions. We need to believe on the data or the model things, because the data and the model will not tell the overconfident options for us.
Yeah.
And the other behavioral bias may have the recency bias. So recency bias refers to the situation when people only focus on the recent news instead of the historical news. So in the traditional finance, when we create the models, when we propose the hypothesis or the theories, actually, we use all of the information available in the market. This is the better way. However, in the real life, because our attention is limited, our ability is limited, or our memory is limited, so we only rely on the most recent information and to make a judgment. Then, according to our judgment, we do the investment in the market, and this is gonna make us to lose money again, etc., etc. But those are the important examples on the behavior bias in the real estate property market.
Yeah, those definitely make sense. I like that over 50% of people think that they're overconfident.
Yes.
It's like, well, everybody thinks that they're overconfident, I suppose.
Yeah, at least I'm the first half instead of the bottom half.
Yeah, yeah. So diving into some technology now, in what ways has PropTech or property technology transformed the real estate industry?
PropTech, this is a short version of the property technology. So indeed, we have two different components. Property market, which is the traditional one, like what we have done in the past decades or 2 decades. Technology, which is the recent things we create using the AIs or some other high techs. So the thing is, if we do not use the technology or the high tech in the property market, what should we do? So in the past days, we just rely on the Excels and we collect the data manually online or reading the newspapers or the reports printed. And after that, we subtract the data and put the data in the Excel for one single case. Although in some cases, we can make a template with some functions or the algorithm under the Excel to make it be more flexible. However, because the sales is limited, so we should follow the structure of the Excel template, and it's not very flexible as our expectation. In recent years, so taking advantage of the high technology, we can create the cloud-based workplace, or we can use the centralized platforms to manage the data. For example, the domain or the real estate or the tenant app we use in the real life when we want to rent an apartment in the market, or when we want to buy or invest in the property market. By using the domain or the real estate, who is the combination between the traditional properties information and the advanced technology used, we can first easily find the information because this is the centralized platform. We do not need to go to every agency's office and ask them to provide the information for us. Instead, we can directly open the app or the website provided by the domain or real estate and check all of the listings from different agencies. So this is about the online searching process, which is usually the previous step for the on-site inspections. The second thing is, in addition to collecting the data on the property, on the listing itself, we can do the calculations by ourselves. Because no matter this is the domain or real estate or any other tools, they provide some simple calculators for us on the mortgages or on the performance, the forecastings on the group of the property or on the single properties. So as the retail investors, no matter we have the financial or the investment experience or not, no matter we have the knowledge on it or not, we can follow the content or the tools shown in those platforms and do the calculation by ourselves. This is going to increase our confidence. When we go to find the agent, we have a benchmark or a threshold. And when we discuss or negotiate with them, then we have our the reference point. That's going to help us to be more confident and make more informed decision makings. The third thing is, so when we want to do some inspections after the online search, previously, again, we can only inspect the properties organized by one or two or very limited agencies. However, in nowadays, because all of the listings from every agencies are listed online in the same property, I can make my own calendar for the inspection. I can go to everyone I want to, and then after I on-site inspect the properties I'm interested in it, I negotiate with the agencies who is handling this. This is going to increase our searching and matching quality. Also, it will save a lot of the time because, like we mentioned, our attention, our time, and our knowledge is very limited. So we want to make everything be more efficient and be more focused. That's the advantage brought by the technologies in the traditional property market. And that's why we're going to have the PropTech.
Okay, so we talked a lot about theory, and now I want to move on to some things that we can do in the real world when we're investing. So what can investors do to manage risk and uncertainty in the real estate market?
First, I think try your best to mitigate the information asymmetry. The information asymmetry means usually in the property market, sellers or the agencies have more information than you, no matter this is the public information or the private information, because they are working on that. So most of the time, they just put efforts on searching the information in there. And for the sellers, they live in the property, so they know all of the real situations or the conditions comparing to the buyers. So the recommendation here is try your best to be familiar with the public information for the area, the suburb, or for the housing market dynamics in terms of the demand and the supply changes. For example, we can read the news articles, we can read the policies proposed by the government sectors, we can read some reports published by the professionals in working in the real estate industry. This is the first thing. Try your best to collect information and try your best to mitigate the information gap between you as the investor and the seller or the developer. There is a challenge here is because in nowadays, because we have the high tech has some advantages, but meanwhile they have the disadvantages. We have a lot of the information than we want. So what we should do is we should distinguish which information is true, which information is not true, which information is useful for us to make informed decisions, which information is irrelevant. So that's going to be the second step. After we collect or after we raise a lot of the information, we need to do our own check or judge on them. The second step is to try to use all of the PropTech tools, no matter they are in the domain or the real estate or any other tools online. You just use them and use the information you collect and you selected, put all of information in, trying to do the calculations by yourself. For example, try to calculate the rental yield by yourself. Try to calculate the estimated price for the property in next 5 years by yourself, or try to estimate your mortgage level or the interest you're going to pay in the near future, depending on whether the government going to increase the interest rate or decrease the interest rate. Like maybe in this year, we're going to decrease the interest rate in the Australian market. That matters. The third thing is try to insist your investment target. Because initially, no matter you want to rent or you want to invest, or you want to find a property to live in the market, you have your initial goal, the investment goal. But I have one search analyzing the on-site viewing activities and the final transaction outcomes, I find that when people on-site view the more and more properties, they're going to forget their initial plans in terms of their budget or their desired property outlays or the other characteristics. This indicates that in my paper, I find that when people on-site view the more properties in the market, they're gonna find a property with a higher transaction price and they will pay the higher price than their maximum budget. The other thing is I find that people gonna buy a much better quality properties after on-site views more and more properties in the market. Maybe it's because of the contract effects, because they have already seen a lot of the better quality properties. They indeed are attracted by those high quality ones. So they just forgot their number of the bedrooms they want and need, the total housing areas they want and need. They're going to buy larger properties with more rooms. And because this is the human-based behavior. Yeah. And the third thing is, if you have no idea about the property investment and the market itself, if you are not trained or educated, if you do not have any background at finance or the economics or the business field, then try to seek help, seek advice from the professionals. Although you're going to pay some money initially, however, first you're going to save your time. It's because they can guide you. They can give you the most relevant documentations or informations for the house searching and matching. And they're going to give you a more professional report on the conditions of this property or on the fair price of this property. Under that case, you will save more money during the holding period. If you want to sell in the market in next 5 years or 10 years, then the price is going to be much fit. So linking to the first point, because the first point, my recommendations is to collect the data by yourself. It's not saying that you only rely on the data you collect. Yeah. The way is to help you build the threshold or the benchmark and increase your confidence. However, when you do not have the experience or the knowledge on that, indeed you should go to the professional's place and ask them to help you and pay them.
I will definitely be going to the professionals.
I will too, to be honest. Yeah. Although I work on this field, but most of my knowledge is from the textbook or the papers. However, in practice, because we are human beings, we have a lot of the different behaviors. Yes. That some of them, okay, I understand that. I can remind myself on that. But for the others, maybe I just ignore them in my research, in my papers, readings, and under that case, I may make some mistakes. So if I go to the market and do the investment, I will find the professionals too.
Yeah, that's a great idea. Advice for everyone, even for yourself as a professional. Yes. You can still seek help if you need it.
Yes.
My final question for you on our topic today is, what are the most common mistakes that real estate investors make and how can they be avoided?
Okay. So I think this question can be linked to the previous ones on the behavior biases we're going to make, right?
Of course.
So the first one is, like we mentioned, the overconfident. We think, okay, after on-site views a lot of the properties, after inspect a lot of the properties in the market, we're going to understand the market itself clearly. However, it's only a small portion of the market. We have no big pictures on what is actually happening in the market. So when we think we understand everything in the market, we're going to make mistakes for sure. That's about the overconfidence. So the recommendations here is try to rely on the data. Try to rely on the tools or the text helps you to model something. Do not purely rely on your own sense and your own ideas. The second thing is you do not do your homework by yourself. You directly go to the professional's place and ask them for help, and you just follow what they are instructed. So businessman is businessman. So for all of the professionals, it's their career. So they want to earn the money, right? So if you do not do the homework by yourself, then they're going to charge you a premium for the information asymmetry. Because they have the relative advantage in terms of the information. So they can just earn more from you. So link to the previous recommendations, try to collect as much information as you can, and it's your confidence, it's your relative advantages when you go to find the professionals or when you go to negotiate with others working in the industry. The third thing is we are easily affected by the people we are familiar with, like our families, our friends, or our colleagues. For example, recently, one of my friends told me, okay, you're going to invest in the property market in Melbourne soon, because first, the price is at a lower level and much stable comparing to many other cities in Australia, like the Sydney or even Perth. So this is the bottom point in the Melbourne's housing market. You're going to invest in it. The second thing is they may say, okay, because the government proposed a new policy saying that for the foreign investors, we are not allowed to invest in the Australian market any longer since this April. And the policy going to applying for 2 years, if I remember correctly. So their conclusion is it's a better place because government proposed such type of the policies because they think, okay, the price in Melbourne going to increase. They do not want to have a lot of the foreigners to share the cake. They want to make the household, the citizenships in the Melbourne to enjoy the benefit. But after learning this, so for some of the people, okay, they start to search the property in the market and start to investment. However, if they make decisions so fast, they do not have a very good understanding on what is happening in the market. Maybe they will just find a not good properties. They may find the properties they do not want to live in. They may find the properties without a good investment the yield or some returns. So try to be calm down and try to think about, try to collect the data and try to judge, try to check whether your friend's advice or your family's advice is good or not.
Yeah. That makes sense. Of course, we rely on our friends and family for their opinions, but it's just that. It's opinions. It's not necessarily, the data that we're looking for.
Yeah, it's because most situations, our families or our friends are not the real person working in the industry. They are not not the experts too. So their advice is from their information set and their behavior bias.
Yeah.
So all of the conclusions may be biased or maybe not, but you need to check that.
Of course. Well, we've been through our theoretical section of the podcast, and I want to move on now to our practices and habits. So do you have a habit that you would recommend people practicing when it comes to real estate investing?
For the property investment, I think the daily habit, maybe when you take the breakfast or when you take the meals, you will watch some videos or watch the TV shows, right?
Yeah.
But instead, maybe you can just read some news or reports written by the experts or the professionals in the property market to use your spare time or the pocket time to collect as much information as you can. No matter you are searching the properties in the market or not, it's your collection. You can build your own library or you can build your own knowledge sheet for the property market nearby. Under that case, by the end of the day, you want to invest in the property market, you have already collected a lot of the sense and collected a lot of the information on the market, then the marginal effort you're going to make during the searching period is relatively lower than the people who have no ideas, no information collections on the property market.
Yeah.
So this is the habit I suggest. Just to try to read a lot of the the news or the reports, the articles, instead of watching the TV shows during the meals time.
I feel like that's a habit that a lot of people could take on, not just for our topic today, but for many different interests or many different careers that people are wanting to look into. They can, read the news, and that's always a good way to keep up with what's going on, keep up to date, rather than, you got to be careful because of what you were saying before.
Refresh your mind.
Yeah, of the recency bias, but you can refresh your mind on the news, and that's helpful as well.
Indeed.
Do you find that people will struggle to do this, or there'll be a challenge with trying to collect the information?
Yeah, I think so. Because like I mentioned, when you open your mobile phone, so you just go to some other rumors or some other news articles different from the expert ones.
Yeah.
So a lot of the information coming in. So which information is better, which information is worse, which information is useful, which information gonna bias my decision makings is our term to distinguish it.
Yes.
But as a single person, it's really challenging at the start.
Yes.
But when we try to do this more and more times, and because time will tell you the truth. So when you know the information you collected previously is true or false, when you can see the outcomes, then you will refresh your judgment system. And under that, you can increase your judgment ability and to make your information collection to be more efficient and precious.
Yeah, interesting. So the more you do it and the longer you do it for, you can kind of see the outcomes, and that will better affect your decision making.
Yes.
That makes sense.
Because some of the reports are only the forecasting, right?
Yeah.
But after 1 or 2 years, you see another news which is outcome or which is the current situations or conditions about the market. But previously is the forecasting the conditions, then you can compare them and to check, whether this is precious.
Yeah. Well, we're coming now to our final segment of the podcast, which is our open mic. This is your chance to talk about anything that you're passionate about. It doesn't have to be related to our discussion so far if you don't want, although I imagine you are very passionate about your studies. So the floor is yours.
Okay, so let me advise myself a little bit in this session. So recently in this month, I was working on a new idea related to the PropTech in the Australian market. So to simply put, my idea is if we go to the rental market or the property investment market, we go to check the domains website or the real estate website, we have a lot of the listings. For each listing, we have the photos in addition to the contacts to introduce you the property itself, right? So previous literature focused on the context, the descriptions, or whether the property will provide the amenities or the facilities. However, my focus shifted to the photos they show. So some of the properties, they directly give you the actual photos. So the real situations in the room now with some real furnitures. But there are some staging process in the Australian market, which means that the agency is going to help you to decorate the renovate the room before the sellers want to put the properties in the market, and they will bring their own furnitures to make the rooms be more fancy. Under that case, those properties online will be more attractive too. However, people are going to realize, this will be the real situations, or this will not be the real situations after learning. The third scenario is, under some cases, they just use the photos designed by some tools online. It's not the real ones. It's easily to be found that, this is AI designed. Although it's fancy, however, it's not true. I can easily distinguish this comparing to the staging ones.
Yeah.
And the last one is no furniture at all. I can only see the layouts of the rooms.
Yeah.
So for different scenarios, I want to check whether putting the actual furniture or putting the fancy furniture using the staging process is more attractive to the retail investors in the property market or not, or whether showing us the furnitures or not showing us the furnitures is better or not, and what's the outcomes. For example, although putting some fancy furnitures may be more attractive. However, when the potential buyers indeed on-site views the properties, they will feel regret, or they will feel not good. It's because they think, okay, it's a lie.
Yes.
So I was lied by the providers. So I will not buy the property because I will be lied from other perspectives maybe. So I just want to check whether using this different scenarios on the staging is have different outcomes in terms of the attractiveness or the transaction outcomes, time on market or the final transaction prices. No matter this is the rental market or the selling market, the same, just the price is rental price or the selling price. So if by any chance the audience, you are the people working in a real estate agencies, or you own your own business on this, you have the real data, then please contact me. I was more open to be coordinated with the industrial people because our research rely on the real data, and I think our findings may be helpful for you to show the photos online, and will increase your working efficiencies to some extent. And thank you.
Absolutely. That's a fantastic idea. I mean, so many people rely on the images that are put on the websites to see, is this space going to work for me? But then you see the furniture that's not going to be yours in the space, and it's hard to distinguish whether the space will work for you or not. So
yeah, that's my thought. And that's my experience in the rental market too. So that's why I want to invest in, why I want to doing some researching.
Well, I think it's a fantastic idea, and hopefully we see some of your work soon on that. So just to conclude, thank you so much for being here today. If our listeners want to find out more about you and what you do, where can they go?
They can go to my Deakin's official website. Just use the Google search Yang Shi Deakin, and you can find my website. And you can also check my Google site. This is my personal website. So again, you directly go to the Google and type Yang Shi, maybe finance or real estate, and you can find my website easily.
Great.
Otherwise, you can go to my LinkedIn. So that's the same name.
Amazing. I mean, we can link all of those things and places to find you in our show notes as well, so that our audience can just click on them and they're right there. Well, thank you so much for joining us. I've certainly learned a lot from you, and I hope our audience has as well. Thank you everyone for tuning in, and we'll catch you in the next episode.
You've been listening to Wealth Pathways, the Affluence Science Insights podcast produced by LMSL, the Life Management Science Labs. More episodes are available from 10 life management perspectives and can be found by searching LMSL on Apple Podcasts, Google Podcasts, Spotify, YouTube, and other podcasting apps available on your devices. If you enjoyed this episode, please rate, share, and subscribe to our channel so that other people can find it and we can continue to provide quality content. More of our work can be found on our website at affluence.lifemanagementsciencelabs.com, where you can join our movement. I'm Marie Stella. Thanks for tuning in.